Hey guys, welcome to The Market is Open. Visit our website, themarketisopen.com. In this video, we're talking about Tesla's plan to do a capital raise, as well as Elon Musk telling investors that he believes Tesla stock could be propelled to $500 billion. So let's take a deeper dive into both of these. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Also check out our investor t-shirt and our Elon Musk t-shirt in the description below. Okay, so Tesla announced that they're planning to do a capital raise. It's going to be partially with stock and partially with convertible bonds. About 33% of it is with stock in order to raise about $2 billion in total. Now, the coupon on the bond, that's the interest that Tesla is going to be paying on this convertible bond, is going to be between 1.5 to 2%, which is actually pretty low. However, this is a convertible bond, so at some point the people that buy this bond will be able to convert it into Tesla shares or get paid out at a much higher conversion premium, which is 27.5 to 32.5% higher than the stock price is today. So the stock price is around $244, so it's going to be about 30% higher than that. Tesla does have some other convertible bond that is trading and maturing in 2022. That bond actually has a less favorable, about 2.4% coupon, which is more favorable for investors, but less favorable for Tesla. But it is trading at around a 1% yield to maturity. So this new offering does seem to be more attractive. And I believe the stock price needs to be over $327 in order to trigger a conversion on these convertible bonds. So big investors do love these types of convertible bonds because they're less risky. Bondholders get paid out first before the equity holders, and they also get upside from holding these bonds. So from our video yesterday, Chamath Palihapitiya, for example, says he owns the convertible bonds. So here's Tesla's current stock price. This was the close today, $244.10. That's actually, the stock was up 4% today. So the stock was pretty much trading at its 52-week low when this was announced. So that's pretty bad timing. Tesla's issuing shares, they're basically selling stock at these prices, which are like the lowest prices the stock has been at in the last couple of years. So the timing is pretty bad. Although the $650 million is only about 1.6% of the company, so that's how much shareholders will be diluted. Plus, there might be some future dilution, which is possible due to the nature of the convertible bonds being converted into shares. So, it's still not terrible, but why issue the shares at the 52-week low? Like, Tesla could have easily done this about a month ago, or in fact, they should have said something like they don't need cash and waited for the next quarter in which they're expected to deliver 90,000 cars versus the about 60,000 cars we saw them deliver this quarter, which was below what many people expected. So I think they should have waited and done it from a position of strength, although right now it does seem a little bit desperate for them to do it, which is a little bit unfair because they did try something new, in my opinion, in the first quarter. They tried delivering cars to Europe for the first time, and they ran into a lot of logistical issues. So, they were penalized for that. And then on top of that, you have the analysts asking Tesla to do a capital raise, and Tesla basically agreeing. And that pushes Tesla stock down even further because now people are expecting a capital raise. So I think this wasn't done too well. Maybe there's some method to this madness, but I think this could have been managed a little bit better. It also doesn't make a lot of sense that Zachar Korn, the CFO of Tesla, just said that the company will see its cash go up in the following quarters. So why raise cash, especially when you're expecting 90,000 deliveries? Like the last time Tesla delivered 90,000 cars, which was at the end of last year, albeit at today's prices might be a lower selling price for the cars because they're selling the cheaper versions of the Model 3. However, if you're still selling 90K cars, they're probably going to have a big increase in cash similar to what they had in the last quarter of last year. So maybe investors just wanted this capital raise to feel more comfortable, and Tesla agreed with them. And it's possible that Tesla didn't really need the cash, given that they expect their cash position to increase even without this capital raise. But that said, you know what they say, you raise cash when you don't need it, because when you do need it, no one's going to give it to you. So hopefully with all of this new cash, they don't become complacent again. They should continue to cut costs and operate a pretty lean operation like they were doing before. So they said they're going to spend this on their corporate operations. I'm assuming that means they're going to spend it on whatever they want. So I think, like they spent a lot of money on the Model 3 ramp up. So it's not over yet, and like the return on it so far has been negative. I mean, they spent way more money than they got back. However, that's sort of an unfair view because the investment, like now that the investment has been made, the factory is going to be able to pump out cars forever, basically. So I think they learned a lot from the Model 3 and like their project in China, which is already funded with debt. They'll be able to sort of like crush the California factory in terms of the efficiency of the Chinese factory. Basically, what I'm saying is that there was a big upfront cost in order to get like Model 3 where it is today, and I believe they might use some of this cash in order to ramp up the Model Y and perhaps the Semi, which might take a huge capital investment as well. Tesla did say that they would try to bring up two platforms at the same time. I'm not sure if that's still the case, but Elon Musk did say that previously. So hopefully they'll try to bring the Semi and the Model Y up at the same time. And hopefully that'll cost less than it did to bring up the Model 3, given all of the new lessons that they learned in building factories and sort of designing it more efficiently and putting things closer together. So hopefully that's something that Tesla will spend their money on. And I mean, they have said that they're not really cash constrained, but this should provide a buffer in terms of allowing them to spend billions of dollars without investors really caring too much that they're getting close to that $0 cash level. So we've been hearing of this broader investor call, which is an investor call in which Tesla announced its plans to raise cash, and it was held by Citigroup and Goldman Sachs, who are the underwriters of this. So Elon Musk said during this call, I mean, he is talking to investors who are giving him cash. He did say during this call that autonomous driving will transform Tesla into a company with a $500 billion market cap. And he also believes that Tesla's, like the value of Tesla's, will increase as the self-driving capabilities are added via the software, and Teslas could be worth up to $250,000 within 3 years. Basically, he's expecting a 5x worth, like a factor of 5 times multiplier on the value of each Tesla when they become robo-taxis. So we'll talk about the $500 billion market cap in a moment. One of the questions that apparently was asked was, how will Tesla go from 20% gross margins to 25%? And Elon said that they're going to improve efficiencies with the supply chain, but he feels good about the 20% gross margins going forward. But I think he also told him not to be so nitpicky on the gross margins, which I believe he's correct about, because that isn't too important if they believe that most of the value of the company currently is going to be relying on autonomous driving. So let's address Elon Musk's $500 billion market cap comment. So first of all, the stock is at around $42 billion. So like, I don't like it when people have these insane price targets. It sort of has the opposite effect and makes people want to sell the stock. So, and the other thing is, like, why issue stock at $42 billion if you believe that the stock is worth $500 billion? So clearly he's talking to investors and he needs to hype this up a little bit. But I mean, like, let's see, $100 billion market cap first. Like, people are still waiting for the $420 price target. So that's the first thing. But is it possible for Tesla to get to a $500 billion market cap? So, I mean, first of all, everyone is paying Tesla to buy, like, the actual car. And once everyone has the car, like, Tesla can basically flip a switch and turn on the autonomous driving network, and like, they can basically undercut Uber because there's no driver required, and they'll take 30%. They said 25 to 30%, but let's say they take 30% of all of the revenue generated from this. So that's pretty much the Apple playbook, in my opinion. Everyone has an iPhone, for example, and they also pay monthly services on top of that, and it makes it pretty hard to switch away from Apple. So Tesla is doing that, albeit instead of selling $1,000 iPhones, they're going to be selling $50,000 cars. Okay, but let's look at some of these numbers that Tesla sort of put together. I don't know how correct they believe these numbers are, but basically, according to Tesla, they believe that they can make, or that each Tesla car can make $30,000 gross profits per year. So let's say Tesla takes 30% of that. That's about, let's say, $10,000 per year per car. Okay, so let's do a little bit of back of the envelope calculations here. Let's try to get to that $500 billion market cap and see how many cars Tesla actually needs to produce that are going to be having this autonomous self-driving Tesla network feature in order to reach this $500 billion market cap. So if we start at $500 billion and work backwards, let's pretend the company will have a conservative 20 times PE ratio. That assumes this occurs in a couple of years and the growth slows. I mean, it's possible that the PE ratio is much higher than this. So if we start with that, 500 billion divided by the 20 PE price earnings ratio gives $25 billion in earnings required to get this $500 billion market cap. Okay, so how does Tesla get to $25 billion in profit? Well, we just said that they're going to be taking $10,000 per car for their autonomous network. So if there's one car driving on the road and they're going to get $10,000 per year from this car, so this is for a single year, then how many cars do we need? So if we divide $25 billion by $10,000 per car, Tesla needs to have about 2.5 million cars on the road that are participating in this in the Tesla network. So that actually sounds extremely doable. Currently, they're at around 500,000, so about 1/5 of that. I mean, you would think they would have a $100 billion market cap at a fifth. But I mean, all of this you have to keep in mind, first of all, depends on the self-driving feature. And of course, I mean, this was a back of the envelope calculation. I mean, I was estimating here, not all of this is 100% profits of the $10,000. I mean, it costs money for Tesla to run their own network. Maybe it has 80% margins, for example. Like shouldn't cost too much to add another car into the network. But also what happens if all the people leasing cars give their cars back to Tesla and Tesla operates their own fleet? Let's say maybe 100,000 cars are operated by Tesla alone. So instead of getting $10,000 per car, Tesla's back at that $30,000 number and getting like the full gross profit per car. I mean, that's before their expenses of operating that. So that could be pretty huge. And I'm not even counting vehicle sales or energy or any of that other stuff that Tesla is working on. You have to remember that everyone needs to still buy a Tesla for $30,000, $40,000, $50,000 or even higher before they can even start using the Tesla network and giving Tesla $10,000 per year. So Tesla's going to make money off the sale of the hardware and then sort of this service as time goes on. So I think it is possible down the road for Tesla to actually hit that $500 billion market cap, assuming a bunch of things go to plan. I mean, Elon did say a couple years ago that he did see a clear path to the $700 billion market cap. I believe he said that in one of the conference calls. So actually 500 billion does seem like a bit of a downgrade from that, but it seems that 500 billion is achievable with the autonomy network alone. So I mean, it is important for him to tell this to investors that are investing in his company, and he requires to raise cash in order for him to raise money for this capital raise. But if you believe that Tesla has an advantage with self-driving and they'll be able to deliver on the things that they say they will, then this $500 market cap does seem fairly achievable for the company. All right, hopefully you enjoyed this video. Let me know what you think in the comment section below. Also, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And don't forget to smash that like button. Thanks for watching.